Alright everyone, welcome back to the channel for another Bitcoin update. So what's the next move for Bitcoin and the markets? Let's talk about it in this video, shall we? There is a ton that I need to discuss with you today. So for this video, we're going to be rushing through the Bitcoin TA, what are my price targets in the short term, what should you expect this week, and then after this episode, we're going to be talking about all of the news events that are important for this week. You should definitely get prepared and be privy for these because there is a lot of volatility incoming, especially on Tuesday and Wednesday. So let's talk about the TA. Now, starting off on the daily time frame, I want to do a tiny bit of reflection based on our previous predictions. Now, if you're a seasoned veteran of the channel and you watched our past couple of videos, you may have seen this prediction from 19,400. Before this pump even happened, we were predicting a massive run to the upside based on a breakout on the SPX. Now, what we were saying is from all the way down here, 19,400, we gave you a very specific price target, 12.5% pump up to 17,500. Now, we did come up and we hit this price target. Now, what's interesting about this is the 21,700 target that I mentioned. We had daily rejections once, twice, 3 times, and then coming in today, we exceeded this. We pushed past this and pushed past the original target that I thought we were going to get invalidated from. So it's not exactly the end of the world. You know, like I said, we predicted about a 12.5% pump and we exceeded this by about 3.5%. But I did want to reflect on this because we do like to celebrate whenever we do correctly call anything on this channel. As you know, we've had some very accurate predictions on this channel calling for the exact tops in the stock market, being bearish on Bitcoin for months now. But nonetheless, to become a better trader, it is very important that you reflect on the times where you could have done things differently, and that's what I want to share with you today. No shame in it. No one's going to get everything right 100% of the time. What we were originally calling for seemed unlikely, and this is why I got this slightly wrong. So with this 12.5% pump, like I said, if you go back to this video, you can see none of this pump happened when we were predicting it. So right off the bat, predicting a 12.5% pump out of almost nowhere seemed like a stretch at the time, and we were able to accurately predict this because basically the top of the order book in the E-minis for the S&P 500 mini futures just disappeared, which caused the bid-ask spread to go through the roof, which caused the cost to trade to have increased levels. The cost to trade is still at elevated levels, and this was mistake number 1. Coming into Monday, coming into this week, we still have elevated cost to trade levels, and we're having elevated cost to trade levels with decreasing book depth, meaning liquidity is going down while the cost to trade is going up, while the bid-ask spread is going up. These are all major signs of volatility, which is once again how, when we made this prediction back over at 19,400, we were able to call for this massive break to the upside. But here's where I should have switched, because I did make an update on this Bitcoin major warning, and you know, when I made this video, we were exceeding up to 21,700, and we had some bullish news come in for the markets, and this was in the form of the ECB increasing the interest rates across the board, 75 basis points across pretty much everything. And with this, I did not expect that this was going to have a dramatic detrimental effect on the DXY. However, it did. That's where I was wrong. I'm happy to admit I'm wrong when I am. But yeah, I underestimated this news in terms of the ECB and how this would affect the DXY. The DXY was pulled back to the downside. However, the DXY I am still very bullish on. We're above the daily EMA ribbons. We're above major areas of support, and we are still making high lows and higher highs in the immediate short term. 4 days ago, we were at 20-year highs, so I'm really not too worried about the DXY. But yeah, I thought, you know, we would just take a second to reflect on where I went wrong. Like I said, no one's going to get these things right 100% of the time, but it is very important that if you are a trader, you are celebrating your wins, but also you're celebrating your losses. And you might be thinking, why would you celebrate your losses? Well, you're celebrating the fact that you've acknowledged where you've went wrong, and you're acknowledging that you went wrong. It's no one else's fault. It's not the liquidity's fault. It's not market manipulation. It's not you know, other people taking this news other ways than me. No, it's 100% my mistake on this part. So with that being said, I also should have been looking at this next level to the upside, and this is what I want to talk about now. So as you can see, I mean, if we clear up this chart, let's highlight these levels over here. Now, you can see while we're in this channel, bear flag, whatever you want to call this, we were more or less trading sideways for about 80% of this trading experience. And you can see also, if you draw this down a tiny bit, like a line of best fit down here, if we draw a line of best fit right in the middle, you can kind of see, you know, counterbody closes over here. You can see rejection points. You can see rejection points. You can see rejection points flipped as support, and then you can see them turning into resistance. We broke back above them. Over here, you can also kind of see these were tried to flip a support. Over here, we went through them. We broke through them. We didn't manage to come back up and back test them. And then, you know, what did we do? You know, drawing this from the top. Major touch points, major touch points, major touch points, major touch points. We broke beneath it. We never retested it. So this was another thing that I also potentially should have foreseen. It's obviously easy to say, you know, I should have foreseen this in hindsight. But as you can see, this was the level that we were attracted to, 22,500. Like I said, we really weren't too far off from this prediction. But, you know, recognizing where you could have done better in these predictions will make you a better trader in these markets. So moving on from here, let's talk about what to expect next in Bitcoin. Well, it's very simple. At this moment in time, I am looking at this bear flag playing out, and I can see that we are running into resistance at 22,500. Now, also, like we were looking at this previous support flip resistance zone, you can see this zone was right here. You know, we've come into contact with the bear flag apex. We've come into contact with the 0.5 Fibonacci down here, and it now looks like we're zooming up to the 618 Fibonacci, which is at 22,600. You can also see this downtrending level of resistance when you connect the top over here, the top over here, the top over here will correlate to a top over here, 22,700. So we've got big touch points, big resistances between 22.5 and 22.7. Now, to make things conservative, to make sure that we're not making the same mistakes as before, which is the name of the game, look at the next levels to the upside, and this is what I'm personally expecting for right now. Move this up, bada bing, bada boom. We've obviously been rejected from here. So I'm personally expecting the next rejection zone for Bitcoin to either be here where we are right now, 22,500, or all the way up here at either somewhere between the region. 23,000 would be a nice psychological level. We also do have touch points over here, but 23,300, this would be a great place to retest before we do get rugged to the downside. Am I saying you should be longing or even expect another couple of $100 to the upside before we break down? No, I'd say the risk adjusted returns wouldn't be in your favor of expecting a further continuation pump to the upside. And here's another reason why. Let's check out the oscillators. So let's check out the money flow index, and let's check out the relative strength index. Getting rid of the RSI based moving average. Those are useless. What you can see is over here, the MFI and the RSI. Now, the MFI is currently at 59, while the RSI is all the way up here at 61. Why is the relative strength index more oversold than the MFI? Well, it's for the very simple reason that the MFI calculates very similarly to the RSI. However, it is referred to the volume weighted RSI for a reason. It incorporates volume. So when the MFI is not overly extended like the RSI is, it simply means there is not a convincing amount of volume in the markets. There's not an over exuberant amount of buyers or bulls right now, and you can see that it is very flat right now. Sure, you can look at some other places. Yes, I've looked at, I basically went through all of the exchanges that I look at, and it's a 50-50 picture. So yes, you might go onto some charts and you might find that the Bitcoin volume is going down on one chart. You might find it going up in the next chart, but I've gone through all of them. On average, they're going down. That's just the fact. And with this is why obviously we're seeing the MFI being underextended in comparison to the RSI. Well, the RSI in the daily time frame is very oversold, or overbought rather, and the MFI is also coming up to this slightly overbought region as we do approach this region. Now, I would also like to highlight, you know, it's if you look back at the previous times where we were around 60 on the MFI and the RSI, we were here, brutal capitulation. Over here you can see brutal capitulation when we were around about 60. Over here you can see brutal capitulation when we were at 76. Over here you can see brutal capitulation when we were at about 71. And then if you scroll back further, you can see, you know, there's been times where you just approach the heart line for the MFI and the RSI and you get absolutely booted back downstairs. Oh no, this was this one here, so this correlated to this breakdown. and then this one correlated to this breakdown. But really, I think it's pretty easy to see that on the daily time frame, we're very overbought and we should be expecting to move back down. We've obviously pumped into this because of the ETH merge, but we're overextended now. There's not enough volume coming in to confirm this breakout. We're still making lower highs in the higher time frames. The MFI on the 4-hourly time frame is all the way up here at 72, and the RSI is up at 74. Why is the RSI higher than the MFI? Once again, there is not enough volume continuation saying that we're bullish right now. So for these reasons, this is why I am particularly highlighting the 22,500 / 23,300, 23,400. This is where I personally think that we're next going to get rejected from over on BTC. Now, a couple of other ideas I want to share. The total crypto market cap is literally sitting on the $1 trillion level. If we zoom in, you can see the 1 trillion is right here. Boom. And what do you know? We've broken up. Yes, this looks something like a bull flag. I wouldn't bet on this breaking out bullish yet, but you can see that we are holding 1 trillion right now. So if you do see the total crypto market cap start to break down from this 1 trillion, that is really where the breakdown is going to be basically confirmed at that point. It'd be kind of hard to argue that we'd be bullish, especially after when you zoom out on the total crypto market cap, you can see massive run up. We've come all the way back down to the 786 Fibonacci. We've come back up to your 618 Fibonacci, confirmed it as resistance, and we've started to break down. We've broken down from this bear flag, this higher time frame bear flag as well, which is much more important than the daily bull flag. And then with this, you can see we're getting an increase right now, but we could also get a tiny bit of continuation. We could run up just below the 618. We could make an M pattern coming down, running up into the short-term moving average on the weekly EMA ribbons before breaking down. So there's a ton of things that could potentially play out on the total crypto market cap, but it's not looking good right now, and it's definitely not looking good for the altcoin market cap, which is heavily heading down already. The daily EMA ribbons are bearish, and we are currently coming back down to retest these at this moment in time. And for the altcoin market, we're also sitting at the 4-hourly EMA ribbon. So this is what I see playing out for the total crypto market cap. I definitely think we're coming down to take out these lows. I think we're going way below the 400 billion, which should mean that we've got more than about, where are we from here? At least another 33% drop for altcoins. And talking about altcoins, Bitcoin Dominance is going up. This is an impressive jump. However, there's not too much to update. You can see there's highs here, there's lows, lower lows, lower lows, lower lows, lower highs. And this was a macro lower high. So still, the direction just seems kind of flat for the Bitcoin Dominance. But I do think this is going to start gearing up for a massive move to the upside. I only think that the move to the upside is going to happen when the final capitulation is in place. Then I think altcoin holders will get absolutely decimated. But yeah, that's what I see playing out in the Bitcoin Dominance. If we do also head over to the SPY could be looking at a tiny bit more continuation before we do break down to the downside. Let me show you something. So if I get rid of this, you can see on the major breakdowns to the downside. So if we're looking at, was this one right here. If you look at this major first breakdown to the downside, swing high down to swing low, you can see 786 Fibonacci right at this level. Let's look at the next level, and then I'll talk about why I'm looking at this. You can see the next macro breakdown was from this top to this low down here, and you can see you've got a 786 Fibonacci right here. Now, why do I highlight this? We've got two breakdowns, and these both look very similar. I wouldn't be surprised if these fractals actually line up, because it looks like there's a mini pump between both of these. So if you connect the top over here, have I done this right? So yeah, it almost lines up. There's a little bit of an inverse over here, but you can see that, you've got this massive peak, you've got a run down, you've got a bounce up, and then you've got the actual macro leg back down. So you've got a mini move, like a micro time frame move within this. And then you obviously come up to the 786. And then as you can see from here, you broke down, you came back up just like you did over here. You came back down making new lows just like you did over here. You come back up to the trend line just like you did over here. And you get rejected just before you run into the 786 Fibonacci, just like you did over here. Now, with this as well, you can also see the next time we started break down, we went down for 3 weeks, and then we started bouncing back up to the upside. And here you can see 1, 2, 3 weeks, and then we started bouncing back up to the upside. So the similarities between here are very, very similar. However, right now, we've obviously got more bullish news coming into these markets, which I will once again talk about in my news update, which I will be uploading next. But for the S&P 500, why I highlighted this is if you look at the micro moves as well, you can see the micro moves either run between the 618 or the zero point 0.5 Fibonacci, and I've looked at all of these micro moves so I can do this for you. Like I said, this one was exceeding the 618, this one was below the 0.5, and you'll find the same thing whether you, when you're looking at the rest of them. What you can see here is we're between the 0.5 and the 618. So where would be a beautiful place to get rejected from? Between this region right here and right here over on the SPX, which means, in my opinion, the SPY rather should be coming up to a top very, very soon, and we should be starting this M pattern breakdown to the downside. And this M pattern breakdown looks awfully similar to what happened in 2008, when you can see this run to the upside that was perfectly choreographed. This was one of the reasons why we were able to perfectly call the stock market top. You can see a massive run up, a massive run back down, massive run back up, and while this obviously didn't, you know, continue breaking down and then bouncing up like it did in 2008, we can definitely expect a very similar M pattern to take place over the same type of period of time. And one other reason, at the start of the video, I talked about reflecting on how we could have better called this. Another way that we could have done is, instead of looking at the SPX Fractal, we've previously looked at this, we copy and pasted this on a weekly time frame. If we copy and pasted this on a daily time frame, you would have actually seen, yes, some of the peaks were slightly off. You can see this one was off by about 3 or 4 days, but then you can see the bottom was perfectly called over on this fractal, and the top was called for yesterday. So if we're going to continue with the rest of these, and you know, the bottoms and the troughs are going to line up about 3 days before or after, we should be expecting the top to be in for the SPX and subsequently for Bitcoin coming into about Wednesday and Thursday. And then this is going to be even more important when you watch my next video talking about the news events taking place this week. But like I said, there's a lot going on Tuesday, Wednesday and Thursday, it seems. So the middle of the week, there's going to be a lot of volatility, so you're going to want to prepare for these. Like I said at the start of the video, the DXY is coming down higher than anticipated after the quote-unquote bullish news with the ECB raising their interest rates by 75 basis points. And another reason why I didn't particularly think we were going to rally so hard on this is because the US has been doing this for months. So it just is what it is. It is what it is. We got way over exuberant for this, but it is what it is. DXY, like I said, 107.15 is where I see us coming down to in the short term. So this could mean another 1% or so down for the DXY, another couple of percent up if we are going to come up to 23.3 for Bitcoin. And then over on the VIX, you can also see the volatility index for the S&P 500 is predicting for the next couple of weeks to have a large amount of the next couple of months to be highly stagnant, with one major peak in volatility, and then coming into December/January, a massive run up for the volatility index for the S&P 500. If you're new to the channel and you don't know this, the VIX is inversely correlated to the SPX. So with this massive spike in the VIX, we should be expecting the bottom for the stock market to take place. And I've talked about this previously. I'm expecting tech stocks to bottom before I expect the SPX to bottom. If you want to learn more about that, be sure to check out my channel. I've provided many of these updates where I've talked, I think it was on this video, Bitcoin bottom on this exact date, looking at the fractals, and we discussed that in depth over there. So if you want to check that out, be sure to check that out. But yeah, that's pretty much all I've got. In the next week as well, we've got the FOMC meeting. I will be discussing that. I will also let you know there are some pretty crazy exchange inflows happening right now. Just before the Ethereum merge, I call this the Ethereum purge. 119.5 thousand Ethereum, or $207.6 million US inflowed to Binance. After that, you can see about 30,000 Ethereum transferred from an unknown wallets to OKX, 150,000 Ethereum transferred from unknown to unknown. That's neither bullish or bearish. We don't know where that's coming from or where that's going to. You can also see XRP, $10.6 million worth of XRP transferred to Bitstamp. You've got over here you can actually see 22 million of outflows from Coinbase, so that is bullish. But then you come on to more stories. You know, you've got another 13.8 million transferred to Binance. Unknown wallets to unknown wallets, unknown to unknown. Another 35 million to Binance. This was 50 million out of Binance, which is bullish. And then you've got 53 million BUSD minted at Binance. But yeah, there's just a lot of inflows happening right now, and predominantly this seems to be from the 119.5 1,000 ETH transferred to Binance. So this will definitely put a slight damper on the market. Nonetheless, I do expect a tiny bit of continuation from where we are now before we do actually top out. But let's see how this plays out. I see us rejecting somewhere in this red box. So all I've got for you for this episode, my friends. Hope to see you in the next news update. And yeah, can't wait out. Peace.